I think it's a good idea for us to go over all the major markets. So let me share my screen and let's start with the stock markets actually. So this is a longer term chart of the E-mini, the S&P 500. You can see this is a monthly chart. We were in a decreasing volatility bull market until there, which is a slow, quiet, easy to predict bull market. After here, we've gone to a high volatility regime. Now, what we saw here is that once volatility starts to pick up, it has a statistical tendency to keep picking up. So we can reasonably expect more volatility. Now, right now, we're at the 28th of October, so we're about to close monthly charts. Now, here we have significant high, lower close, higher close, the classic retest variation sell setup, which would be triggered on a break of this low. So what this is telling us is that the market is coming to an inflection point. The bears are probably going to have an opportunity and they might run it down, or if those bears get it wrong here, if we close above this line here, we're probably going to keep increasing volatility until we reach a blow off top, something like here. So if we look at previous market tops, the blow off top was in 2000. This one was a decreasing volatility top. You can see that we're about the level that would constitute a top, because greed and fear are not the same thing. This extreme of volatility was an extreme of fear in 2009. So let's drop back a bit and see what's happening. Let's start with the daily. So as I've been talking about, this market has been going up here. You know, we're in a bull market, we're in a bull leg of a bull market. This should be very strong. So any dip should be bought. Here, this should have been bought and got to fresh highs, but it didn't. That tells us that something weird is going on. Now, if we look at the structure underneath this, here we have a gap down. Now, gaps down that are not filled are extremely bearish, especially at the start of a move. Towards the end of a move, they indicate reversal, but we've got a micro gap down here and we've got another micro gap today. So what that's telling us is that this market has the potential to fall and fall a long way. Now, we are falling in a decreasing volatility way. And what I mean by that is that there's a lot of overlap between these bars. You can see here we have a double inside period, a lot of overlap again. That overlap is telling us that there's two-sided buying and selling in the market. So this is not clear. So sometimes the information the market's telling us is that nothing is really clear. Now, it could go either way, in other words. And if you think about it logically, the election could go either way too, right? Like, so, you know, the charts are telling us what we already know. The election could go either way. The results highly uncertain. Here we go. So previously we have this is a weekly chart, the S&P 500. We have the coronavirus crash. We have a rally to close above the old highs. This should be on like Donkey Kong, right? Like this should be new bull market. Everyone who sold out here is going to be forced to buy back in. And we've got objectively a weak breakout. So right now we've got a little bit of chop around the old highs. That's pretty normal. So if this breakout fails, it's going to catch all the people who bought here by surprise and probably cause a move down to here. If this attempted bear move fails and we close firstly above here and then above there, all the people who are betting that the bull market is over are going to be forced to cover and they're going to power a new leg up. So right now, we have a completed sell setup on the weekly, significant high, lower closes, higher close, break of the bar low. The classic RTV sell setup from the scalping system. We have a potential setup on the monthly chart. And one of the ways that we can improve the probability of our sell setups working is if they trigger first on the first on the daily, then on the weekly, then on the monthly, and that's what's happening here. This setup isn't even completed yet, and we've got the same setup just completed on the monthly. So this is, make no mistake, this is a potential turning point for the market. And, you know, that makes logical sense because the election is a potential turning point for the world, right? Okay, so let's look at the next market on my list is gold, just because I'm positioned in it and I like it. So if we look at a weekly basis, the last year, very definitely been in a bull market. Very definitely. We have that completed sell setup here, but that sell setup is not working, and we've painted a buy setup. Significant low, higher close, lower close. If this breaks to fresh highs here, we're probably looking at another leg up. And if we look at the legs, previous legs up from here to here, from here to here, from here to here, from here to here, that'd be a tradable move. Let's look at it on a daily basis. On a daily basis, this thing has gone sideways, completed a triangle, broke this old low here, and then has rejected that. So right now, if we look at the most recent data, what does this section of price action tell you? We've got down, up, down, up, up, down, up, down, up, down, up, up, down, down, up, down. It's totally choppy, right? It's also, every bar is very overlapping. We can see volatility, this is average true range, is falling continuously, which tells us that we're at an extreme of low volatility that we haven't been since before the previous move. You can see what happened in the previous time. We got to an extreme of low volatility here and then we broke up. So now we're at an extreme of low volatility and we're going to break in one direction. Now, this is crunch time for gold, because one of the things we know is that bull markets paint beautiful looking short sell setups that don't work. Like this one here, that's a beautiful sell setup. If that doesn't work, we're going to go up. Like this one here, that's a beautiful sell signal, worked for a little minute, then stopped. This one's a beautiful sell setup, didn't work at all. This one's a beautiful sell setup here. It's hard to see, but it just didn't work at all. So this is where the rubber hits the road for gold. If this is a bull market, then we should very quickly start to jack up. If it's not a bull market, if we break here, we can say, well, maybe it's not in a bull market. But right now, if we look at it on a monthly basis, gold's a bull market. You know, we see a big, deep retest of the lows, a little bit of fucking around, and then it's off to the races. We closed above all-time highs. So a little bit of back and forth at all-time highs is pretty normal. And why is that? Because anyone who bought here, there's a lot of people who are just waiting to get their money back. People wait to get their money back. So I got my money back, I'm out. Or it's the highest price it's ever been. Humans are irrational and illogical. So you can feel really good about, you feel like shit if it gets to here and you sold here, but you feel great momentarily if you sell at the highest price it's ever been. So there should be selling pressure anytime there's the highest price it's ever been. When that selling pressure is wiped out, if we break here, then it's off to the races again. So once again, we have this same situation that we've got a potential sell setup, significant high, lower close, higher close. If this one works, we're not in a bull market. If this one doesn't work, or if it's never entered, that's a very good sign that gold is going to go a lot higher. How much higher? Actually, let's throw it on a log scale, reset it. Let's look at it on a yearly basis, 3-monthly basis. So this is a 3-month chart. You can see that the 1 and 2 bull markets we've had since 1976, it really looks like we're going up for a third. And look how big those bull markets are on log scale. We can reasonably expect something like that. So, you know, a move certainly above 5,000 if that's in play. So this is something to keep a very close eye on. Let me take it off large scale again, and let's go to the next market on my list. Let's go to Euro US dollar, the biggest. All right. So that's a 3-month chart. Let's look at a monthly chart. So what's the first thing that jumps out to you on that chart? That's a monthly chart going back to 1994. The first thing that jumps out to me is that we're neither in a bull market nor a bear market. This has just fucked around for decades. Like, this was a bull market, and this is like choppy. And we've had little stretches of a year up, a year down. This is an inconclusive market. So markets typically change direction at extremes of low volatility. So they change character. So here, this character here is choppy. Lots of overlap. Down, up, up, down, up, choppy. See how the character has changed from choppy to smooth. Up, down, up. So we have a potential monthly sell signal activated on the break of this low stop loss here. Let's look at it on a weekly basis. On a weekly basis, we have an extreme of high volatility, which is unsustainable, and we've been going up and falling in volatility. So this market, it's a bull move. We've got to pull back. There should be buyers here. Do we really have buyers here? Kind of. It's inconclusive yet, but we should be breaking this old high very soon. And the fact that we haven't is very, very stinky. So what I'm seeing is the first signs. This is a daily chart. So what did we see here? We have a classic, the market is making new highs, but very weakly, just eking up, just tipping it out. So what that's telling us is the market is having trouble going up. It's choppy, and look at it going up here. We've got up, down, up, down, up, down, up, down. All of this decreasing volatility to an extreme of low volatility. Now, I get very interested at extremes of low volatility because it's often where turning points happen. We've been going up, and if this is a turning point, then it's a good risk reward to go down. So I went short yesterday on a break of this low with a stop loss here. I think that's a really nice trade and potentially a change of trend. So viewed as a totality, we have the S&P 500 with a potential trend change. We have the Euro USD with a potential trend change. We have gold with the potential to go either way, but the odds favor gold spiking. What else do we have? Let's have a look at copper, which is often a good leading indicator of economic activity. Let's look at it on a weekly basis. So copper has been going up since the March lows. But check this out. It's become a channel. So this is a nice smooth trend, and this is a channel. A channel is a technical term for a weakening uptrend. So anytime you see like a zigzag channel that you can draw diagonal lines, it's a weakening trend. So it's a weakening trend. Look at the last breakout is weak. We haven't got a reason to get short, but we've got again, this lowest volatility in a long, long time. So we've got the lowest volatility since the lows. This is always a warning sign for trend reversal, the extremes of low volatility. The reason for that is we know extremes of both low and high volatility are unsustainable. And volatility, if you look at it, it cycles between low to high to low to high, high, low, high, low. And statistically, this is far more predictable than price. Price is very difficult to predict. Okay, so let's look at the other one that I'm really following closely, Bitcoin. Fucking look at that. Fresh highs, made fresh highs, closed above them, and then broke out again. This market is off to the races. And if we look at it on a weekly basis, on a monthly basis first, you can see that we have a lot of stops here. We're about to bust through those stops. If we close above this high, which is 13,880 on a Bitstamp basis, at the moment we're 13,800, so we're pretty close to that. If we close above that, we can reasonably target the old highs of 19,000. And that's quite remarkable because this is 2017 when you couldn't hear anything but Bitcoin, Bitcoin, Bitcoin. Now, if we change this chart to a log scale, this really does look very, very bullish. Bitcoin looks like a fantastic market to me now. And let's look at Ethereum, because the overall Ethereum's lagging a little bit, but still being very strong. It's still above $400. And let's look at Ethereum Bitcoin, because Ethereum Bitcoin is a bellwether for, is Bitcoin gonna perform, or is the altcoins gonna perform? And here you can see very clearly that Ethereum and altcoins were outperforming Bitcoin. Now Bitcoin's taking it back. So that's a little bit inconclusive as well. All right, guys. Yeah, that's all I wanted to share for you today. And it seems like we're setting up for a very, very major move after the election. So just be frosty, right?